Welcome back to The Explainer. Today, we are diving deep into a pretty significant recovery in the crypto market. And the key thing here is that this whole move is being fueled by some really powerful institutional and macroeconomic forces. Bitcoin has absolutely smashed past a key psychological level, and it's basically pulling the entire market right up along with it. That bullish feeling, yeah, it's back. But here's the million-dollar question we have to ask. Is this for real? Is this a sustainable move, or are we just looking at a short-lived sugar rush before a big correction? So let's get into the key factors that are driving everything right now. So here's our game plan. First, we're going to look at the catalysts behind this price explosion. Then, we'll see how that energy is starting to spill over into altcoins. After that, we need to pump the brakes a bit and check the data versus the hype. And we'll wrap it all up with a solid plan for what you should be watching next. Okay, let's get right into it. Because what's happening is that there are two major, and I mean major, forces pushing this market higher. What's so fascinating here is that the rally is getting support from two completely different directions. It's like a pincer movement of good news. On one side, you got this big wave of global economic optimism, and on the other, you have honest-to-goodness concrete adoption from Wall Street. So this is the big macro catalyst. Easing trade tensions. I mean, that just removes this huge dark cloud that's been hanging over all the financial markets. It gets people excited to take on more risk, and you know what? Crypto absolutely loves that kind of renewed confidence. And this quote, wow, it just perfectly captures the impact of the other big catalyst. See, when a behemoth like JP Morgan makes a move, it's not just about the money involved. It's about the signal, the message it sends to the rest of the financial world. So let's be crystal clear. This isn't just speculation or rumors. We have JP Morgan, one of the biggest banks in the world, now officially accepting Bitcoin and Ethereum as collateral. And then you have publicly traded companies like BitPlanet in South Korea treating Bitcoin like a core treasury asset. This is a massive, fundamental shift in the structure of the market. But the story doesn't stop with Bitcoin. This bullish wave is starting to spread out. We're seeing capital begin to rotate, and that's creating some really fascinating moves over in the altcoin market. And the first place you see this is with Ethereum. It is showing some incredible relative strength right now. I mean, look at that. It's actually outperforming Bitcoin over the last day, and there are some very specific reasons why that's happening. It's really a 1-2 punch for ETH. First, JP Morgan didn't just give a nod to Bitcoin, they specifically included Ethereum, which is a huge institutional stamp of approval. And second, as stablecoins become more and more like the backbone for global payments, the network they all run on, which is mostly Ethereum, becomes absolutely critical infrastructure. But while the big institutions are all focused on the top two, you have to see this. This insane number, a 525% gain in just 30 days. That belongs to Zcash. It has just completely rocketed past its 2021 peak. What this tells us is that there's a powerful new story, or maybe a reemerging story, building around privacy coins. It suggests that a slice of the market is actively looking for assets that really prioritize anonymity, and that's a trend that could easily pull other coins in this space, like Monero, right up with it. Okay. Deep breaths, everyone. Before we get completely carried away with all the excitement, we have to ground ourselves in the data. And right now, there are a few flashing yellow lights that tell us we should probably be a little bit cautious. So the fear and greed index, it's kind of like the market's mood ring. And you can see we've moved out of fear and into neutral. Now that's good, but we all know what happens next. If this thing climbs too fast into extreme greed, it almost always acts as a warning sign that the market is getting overheated and is due for a cool down. Next up, we've got Bitcoin dominance. At nearly 60%, it's still the undisputed king of the market. But that high of a number can also act like a ceiling. It kind of sucks up all the oxygen in the room, which can limit the capital that's available to fuel those really explosive moves in the smaller altcoins. All right, now this is a big one. Pay attention here. The most recent data we have for Bitcoin ETFs shows a net outflow of $3 million. That's a major red flag. Why? Because we look at ETF flows to see if fresh, long-term institutional money is coming in. And that outflow like this suggests this rally might be driven more by short-term hype and derivatives traders, not new, sticky money. So this slide really sums up the tricky spot we're in. You've got these incredibly powerful bullish stories, right? Macro news, institutional adoption, clashing head-on with some pretty bearish data, like those negative ETF flows. And this, of course, brings up that classic risk of a sell the news event, where a market actually dips right after good news is confirmed because, well, everyone already bought in. So what in the world are you supposed to do with all of this information? How do you possibly navigate a market that's sending such conflicting signals? Well, here is a clear plan for the next 24 to 48 hours. Your focus needs to be on three key things. First, watch tomorrow's ETF flow data like a hawk. A strong positive number there could mean this rally has legs. Second, keep an eye on any news about stablecoin legislation, especially the Genius Act. If that passes, it would be a huge boost for Ethereum and DeFi. And third, and this is the most important one, protect your capital. Look, obviously this is not financial advice, but a core principle for anybody in a volatile market is to have a plan before you need it. Knowing your exit points, managing your risk, that's what separates disciplined traders from gamblers, especially when the market is moving this fast. And all of this leaves us with one final, and I think pretty provocative thought. As these two worlds, traditional Wall Street finance and decentralized crypto, continue to collide and merge, who is really changing whom? Is Wall Street going to tame crypto and mold it into its own image? Or are the core ideas of crypto going to fundamentally change the nature of finance forever? That is the multi-trillion-dollar question.